We do see the Aussie breaking the 66 top side, if you like, over coming months, and in fact we expect the Aussie to reach 68 by the end of the year.
Hi Rodrigo, why is the US dollar near a 5-week low?
Well, there's a lot of going on, but in particular, from a sort of macroeconomic perspective, what has happened is that the Fed chair, Chair Powell, made this big speech at Jackson Hole and effectively gave the green light to cutting rates in September. All, of course, subject to the data flow, but he also acknowledged that they are more concerned about the labour market and potential risks to the labour market. So effectively, the market is thinking that unless we get a very positive surprise in terms of the labour market report that is due on Friday, then you got a rate cut is kind of baked in the cake, if you like, for September. And then, of course, the debate goes beyond that, and you start thinking, well, now that they're going to embark on an easing cycle, how low are they going to go? And of course, that's where, of course, the data plays a factor, but also the political pressure, particularly on the Fed, to be aggressive in terms of easing has affected the US dollar. So that's one of the reasons why we're seeing the dollar a little bit weaker and potentially could embark into another sort of downtrend over coming months.
Is geopolitical uncertainty and the uncertainty we're seeing in relation to tariffs also playing a role here in terms of the softness of the US dollar?
Yes. So it's almost like there's several dimensions going on here. So the first one, of course, is what is the impact of tariffs, and particularly for the US in terms of inflation. And the central bank in particular had been warning that they're concerned about the potential that inflation could rise. And in that scenario, it restricts the ability of the central bank to ease. So one takeaway from Jackson Hole is that they're not as concerned as they were before in that regard. So that's, again, a green light for the US dollar to decline. And then, of course, over the sort of more medium term, if you like, is what is the impact to growth? Is this going to hamper the US economy quite a bit in terms of growth? Because effectively, tariffs are not only a form of tax for the consumer, but also they introduce inefficiencies to the economy. And then the flip side to all of that, of course, is that this is affecting all major trading partners, and it was almost like a question about who's going to hurt more from this outcome. And I think that that's where the market is trying to ascertain how economies are going to perform over the next 12 to 24 months, and that is really an open debate at the moment.
Okay, so it's all fuel for the gold price, isn't it, which hit an all-time high overnight?
Yeah, so the gold price is sort of enjoying a really kind of moment in the sun, because from a gold perspective, you're an investor for one. There's always that opportunity cost. You buy gold, but you don't get a yield for it. And but if interest rates are going down in the US, it makes that opportunity cost less costly in a sense. So gold becomes appealing. And then, of course, in addition to that, there's that uncertainty around, that the President Trump policies are challenging some of the independence of institutions, in particular the central bank. And again, you're looking for an alternative, a safe haven alternative, and that's where gold also plays a part. And we've seen, in addition to that as well, from a geopolitical perspective, particularly after the Russia-Ukraine war, that many reserve managers that maybe feel that they're not friendly with the US, that maybe it's not a good idea to hold too many US assets. So again, this alternative for gold is suggesting that there's potentially a little bit more to go for gold to go higher.
There's increasing speculation that gold could breach that $4,000 an ounce mark. What do you think? Is that likely?
Well, we think that there's a good chance that over the coming years, and potentially 12 months or so, that the gold will continue to rise and head to those levels, if not higher. We've seen quite a bit of evidence that there's a lot of reserve managers, for instance, China as well, that they're looking to diversify away from US assets. And again, gold is an alternative. And then when you look at some of particularly sort of Middle East and Asian reserve managers compared to other reserve managers, the allocation of gold is quite low. So that transition to increase that allocation to gold means that there's an opportunity here, of course, to increase the allocation of the demand. The big unknown, of course, is to what extent and how aggressive President Trump policies are in terms of disrupting the safe haven appeal of the US dollar, and that in itself could potentially again be another upside for gold and alternatives as well.
What does this mean for the Australian dollar, which has been pushing 65.5 cents recently? Do you see it being able to push through what seems like a resistance level somewhat in the near term?
Yeah, I think it's fair to say the Aussie's been very boring, very stuck in the 64, 66 range. We think that, particularly when you think about sort of the macroeconomics in the US, this idea that we will start to see more evidence of weakness in the labor market, that will allow the central bank to ease. So we expect the central bank in the US to cut twice this year and another 3 times next year. So that's a nice, powerful sort of, if you like, downward force on the US dollar. And that in itself will be a nice tailwind for the Aussie. So we do see the Aussie breaking the 66 top side, if you like, over coming months. And in fact, we expect the Aussie to reach 68 by the end of the year.
Rodrigo Catril, good to speak to you.
Thanks, Cassie.